Hey there, everybody. It is Mike Wise, CMG Home Loans, with your weekly mortgage update. And it's been a pretty uneventful week in the way of numbers, but want to go over a few things with you real quick here, and we'll show you what the market is doing. So let's go to the next page here. Let's start off with the CoreLogic housing for the month of March. They reported very strong earnings, very strong numbers on the housing, up 1.2% for March. Yeah, that's just 1 month, 1.2%, after 0.7% in February. Year over year, they're up 5.3%. And the forecast for the coming month is 0.8%. The coming year is another 3.7%. So very, very strong housing market. The link to the report is down below in this email. So take a look at that, and you can read some of the data a little bit. You can see across the United States the hot areas that are growing a lot in the housing market as far as home prices are concerned. And then down here is the top 10 areas: San Diego and Los Angeles in California being the two of the top 10 areas across the United States that are growing. So very, very strong housing market. If you can buy a house now, it is a good time to buy. So wage growth is slowing down. We had the wage go super fast here, and now it's starting to slow down. It's starting to peter out a little bit, and it's not growing as fast as they would like it to. So that's slowing down. The other thing is the government, the pandemic era excess savings, the consumer, they're not saving. They're going into their savings, so their savings rates are falling down. They're going down, down, down. In fact, they've dipped into their original savings account before the pandemic. So you can see here that in August of 2021, it was at the highest level of 2.1 trillion, and it's at a negative 72 billion. So is the consumer done? I'm not quite sure, but it is looking like that might be the case. So in fact, the buy now, pay later, you guys have heard of this. It is becoming a thing for sure. It is buy now, pay later. It has kind of been that phenomenon. And you can see that the Bloomberg survey here, basically, people are buying more than they can afford. Not only that, none of these things they're reported to the bureaus, so the bureaus don't know about these things. It's just people that have gone in. The stores have allowed the buy now, pay later, and 43% who owe money on these were behind on their payments. 33% turned to services, the buy now, pay later, after maxing out their credit cards, and 54% said they bought more than they can afford. So these numbers, you can look at these in here, and they're kind of out of control. In fact, we saw this. We had this report from Bloomberg, and then the next day, the Bank of America, Liz Everett, who is one of the heads at Bank of America, she basically came in and said the same thing, that these buy now, pay later people, there was a ton of them in Bank of America's portfolio that used them. 69 million customers, and 8.5% of customers had transactions in March. 50% were lower income consumers, and the basically almost 10% of Bank of America's customers, which is about 69 million customers, used it one time in March. So the heavy users are the ones that are using it like 20 times per month. So 20 times per month that you're using the buy now, pay later. The consumer is at the end of the rope. I think this is where we're starting to see the consumer stall. The retail sales are going down. In fact, this is going to drive more things. Like Sweden, they actually cut their key rate, so their Fed funds rate, they cut that this week as well. So they went down. So we're going to start to see others lower their rates. So what has the impact been on mortgage rates this week, on the treasuries? Basically, it's flatlined here. It has not done very, very much. It's just kind of hitting this 50-day moving average, and it's kind of bumping up against that 50-day moving average and not going any higher. So when those go higher, rates come down. but we haven't seen any breakthrough in that. So, and I don't think that we're going to see too much of a breakthrough. But next week, the inflation numbers come out. If the inflation numbers come down a little bit, then we might see us break through and get some higher prices, which would mean lower rates. And you can see over here on the yield that that's basically just stalled out at 4.5% or just below 4.5% on the 10-year yield. So the 10-year yield, 4.5%. That's kind of where we're at. And with that, we're going to go to, sorry, I went backwards there. And so the impact on mortgage rates, they're still down a little bit. Last week, they were at 7.37%. So they're down another quarter of a point here on the 30-year fixed rate mortgages. So we'll see. I don't think interest rates are going to go down too much further, but we did see some improvement earlier in the week. And then there's a link below I put in here for fun: 75 outdoor living room ideas for your house. So the link is below. Click on the link. There's 75 of them. Pick one. Tell me which one your favorite is, and send it back to me. So, anyways, this is Mike Wise. I hope you have a great weekend. I will be around. Happy Mother's Day to everybody, to all those mothers out there. And don't forget our rate rebound product. Have a great one, and we'll talk to you soon. Bye-bye.